Live.
It's time to get on the right path with Right Path Real Estate Radio.
Only thing that makes me nervous is how he's shooting that, because I got all kinds of stuff on the window.
Yeah, I know, right?
Like,
list of private investors.
Yeah, that's right. Jason's checking account and password.
Right. And my aunt's dog's name.
Yeah.
High school mascot.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713.
All right, gentlemen, stand by.
Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. It's Interview and Investor Friday, and I've got a special guest, Scott Carson. How are you
Buenos
doing?
dias.
Buenos dias, Senor Bible.
I thought yourself that this is a show that never ends.
That's
you know
right.
what I mean?
Yeah, exactly. So welcome to the show. You were in town, and I'm like, hey, man, can you stop by the studio? And you're like, well, maybe. I don't know.
You know what? I forget what it's like to drive in traffic, so thank you for the reminder this morning.
That's right. Yeah, hopefully you stayed on this side of town or somewhere. And I think it's probably gotten worse since the last time you've been here. Just so many people are moving here. It just gets crazy.
Well, they're driving their homes over here from Louisiana and other places, and then
So I was down in Memorial yesterday. We had some guys in from L.A. We're doing my favorite. They used to call them channel checks. I don't know what they call them now. Just to kind of check out what's going on and all that. So driving the guys around, and I noticed a bunch of folks in Memorial, people who are still there, bought RVs, and they're living in the RV while the house is getting rehabbed. So it's kind of a mess right now down in Houston, as you know.
Instead of a Hooverville, it's RVville.
Yeah, exactly. So, well, glad you could be on the show. We hadn't chatted on the radio show in probably 6-8 months,
right.
And one of the reasons I like bringing you in is you're in the note business, right?
Mm-hmm.
So maybe explain a little bit about the note business, and then let's talk about what you see going on in the economy here moving into Q4.
So I specialize in buying defaulted debt. Deadbeat borrowers are my clients, basically. Mm-hmm. We buy portfolios of distressed mortgages direct from banks and hedge funds with the whole goal in mind to reach out to the borrowers and try to get them modified, reperforming. Since we're buying the debt at a discount, substantial discounts, usually no more than 50 cents of fair market value, gives us a lot of flexibility to negotiate terms and kind of come up with a win-win solution for the borrowers. So that's been doing that since 2007, and we close on a lot of assets each year. Several hundred. We're getting ready to close on another batch of 33 this week. We closed on 22 weeks ago. I think it'll be about 140 in the last 120 days that we bought. So
one of the things I like that you say, unlike us, we rehab the house, you rehab the borrower.
Amen to that. Yes, I will rehab the bars. I do not want to get in the fix and flip game. There's nothing wrong with it. I just like cash flow, and I like being able to do this from wherever I want to be at.
Yeah, and y'all's portfolio is all over the country, right? So what are the states are y'all principally investing in right now?
Ohio, Michigan. I've invested in Florida for years, South Carolina, North Carolina, Tennessee. Missouri's a good state for us as well, and I don't know if I said Indiana, but a lot in the Hoosier State.
Okay, good deal. So you guys are buying these notes from. Are they owner finance notes, or who do y'all buy these things from?
We don't buy owner finance notes. We buy direct from institutions like banks and large hedge funds that have bought large portfolios of 500 loans or $500 million in product, and they want to sell off $1 million of it, or $5 million of it, or whatever. So we're the trickle down economics. I like to make the joke. We are. Have you ever seen the movie War Dogs? Mm-hmm. Johnny Hill's like, we live on the crumbs and the cracks. We eat very well in the crumbs, in the note cracks, if that makes sense. Yeah.
They're big crumps, when it starts
crumbs
coming down from those asset managers. So good deal. Well, what do you see going on in the market? And here's why Scott's important. Scott's in the distressed debt business. So before it goes to foreclosure, before it goes into a short sale situation, he sees it on his end before I get to take a look at it. So what do you see going on out there in the real estate market?
Well, we always see stuff 6 to 12 months ahead of time. And since we're buying the debt, one of our exit strategies is to foreclose. And depending on the state we're in, the longer foreclosure time frame. So like Texas, we do everything faster. It's fast foreclosures, fast highways, fast executions.
Yeah.
The joke here. So things move a lot.
Why wait, guys?
Yeah, exactly. Let's just go ahead and get it done. Pull the trigger. Need a gun sound to go off here for you. But and then we also look like Florida, which is like a 12 to 18 months. So we start tracking foreclosure time frames, notice of defaults, things like that, to see how the markets are changing. And things are also, been changing in the higher end market for a while now, for the last 6 to 12 months, especially like Aspen, high end condos in Miami. The peak has already happened, and they're starting to come down this way.
So high-end second homes, that's usually a precursor to the 0.01% crowd. Things are slowing down a little bit in that market.
Exactly. When banks start calling me, hey, do you want to buy these high-end condos at a discount? That's when I start, I need to pull back a little bit on that side.
Yeah.
So, and when you have stuff like happened here with the Hurricane Harvey and then also Irma in Florida, that throws a monkey wrench in the foreclosure machine a little bit, because you've got a lot of defaults that are starting to happen. They're not being advertised because banks don't want to be the bad guys right now.
So what I'm hearing on the street is, at least when we're talking to sellers, there's a 12-month moratorium on these mortgages. So you do the first 6 months, in other words, no payments. So 6 months, no payments, then they can just reapply. I'm sure it's like a one-page form. And it's not just, here's the thing people need to remember. It's not just flooded houses. It's if you are impacted by Harvey. So a lot of y'all in Houston have already received a piece of paper that says if you're impacted by Harvey, you don't have to make a payment for up to 12 months. We got one at our house, and my wife's always, she said, "What do we do with that?" I'm like, "We keep paying our mortgage." There's no point in it. You know what I mean? So it's not just the flooded houses. So you're going to see a whole rash of defaults starting sometime next year.
Yeah, people that lost their businesses or lost their jobs or were out of work for a while, because literally 85% of America is one missed paycheck away from being in default.
Oh, wow.
If you did not know that. That's all across the United States.
85% one check, and they are in default.
They're already starting to be in default. So that's the thing. You'll start seeing more foreclosures in 12 months here, 6 months, when the bank's like, okay, we can't hold this bad paper anymore. Now we're losing money on it. The value's 50 cents in the dollar at that point. So you'll start seeing institutions starting to pull those loans together and trying to sell those off in bulk to buyers like me and other things like that. And then we get to be the bad guy that forecloses on the...
I don't mind being a bad guy.
You know what? If we buy it right, we can go from being the bad guy to the good guy.
That's right.
And I like being a good guy.
So
why so serious?
Yeah, why so serious? So cryptic. It's Friday morning. So, all right, so you're starting to see some cracks in that secondary higher end luxury home market. What do you see on the commercial side? Because Tom and I have just been kicking the tar out of multifamily, and I feel it, and then the storm blows through, and I'm like, oh my gosh, Harvey was the biggest bailout program for multifamily.
It's going to be the same way. If you look back, what happened 10 years ago when we had the hurricanes hit here, and everybody moved from New Orleans into like Austin and Dallas and San Antonio, the low end apartments all got pushed up high, and they just got trashed out. People that should not have been given money. I mean, the only people that really won from the hurricane 10 years ago were the strippers. I hate to say this. It's Friday. We can have some fun here. But literally, banks were giving. I used to work for Chase at the time. So Chase was giving away these debit cards with $2,000 on.
That's right. I remember that.
So literally, they were going straight from there. Like, I got $2,000. Let's go buy beer, smokes, and strippers.
Yes. And the joke was it was like tattoos, alcohol, and, and gentlemen's clubs.
Yes.
Right?
And so
that is awesome.
You're going to see a little bit of that. But on the commercial side, you can still keep kicking multifamily. It's still overpriced. It's stupid when people are paying at a premium, because and they are counting on being able to get refinanced out in 3 to 5 years. We're going to get the rents up, we're going to re-gentrify it, and then get refinanced out. Well, that's not, you don't have a crystal ball that sees clearly in 3 years.
So I've been teaching people this for about 8 months because people miss it. There is interest rate risk, which everyone talks about interest rate risk. But then what they don't understand, the real monster is refinance risk. There may not be an appetite in the credit market for that. And I know a couple of guys, 2 partners up in Dallas. They had 1,200 units. Class B, like legit Class B, not like I'm a real estate guru and I'm trying to tell you this is. I mean, it was a legit Class B, making a ton of money on it, and it happened just in like 2010 when there was no appetite for commercial credit, and the bank took it back. They lost everything, and this was a smoking deal. They were killing it, and the problem is that was one of those lessons I learned early on. When I get into, we'll get into multifamily at some point. But
wait 3 to 5 years. You can buy the paper at half off.
That's right. That's what I'm doing. That's why I keep having you on the show, because I'm like, hey, when are you going to call me about that the commercial paper? But And then it's funny, you probably get the same bank that lent on it. They give you the money to buy it, right?
Well,
Anyways,
because it goes from a non-performing thing, so they reclass it as a REIT and they'll finance it for you.
That's right.
At the back end.
That's right. So what's amazing is that refinance risk. A lot of guys don't get it, right? And it's like it's not just the rate. It's even if they have the appetite for that product, if that product's even available, which we saw a lot of in 2009, 2010, that market evaporated.
Right. And then you have other problems with other commercial loans. You know, you have a lot of office space, you have a lot of mixed use, a lot of stuff sitting there that people can't get refinanced out of right now. You know, they bought it and they wanted to go up, and the banks just aren't lending on it right now.
Yeah.
So we're still sitting back waiting for that commercial market to stop going from pretend and extend to the banks just having to write it off. You know, we're starting to see that a little bit more so in some of the bigger banks.
Yeah, I can't wait. I get excited. I do. I think it's
instead of buying a floor, you'll be able to buy a building.
Yeah, I'd like to buy a building. Well, that's a debate. You know, that's a debate we're having in the office right now. I looked at sublease space on this side of town. It's incredible, like almost all-time highs. So it's only a matter of time once those leases expire, the building owners are going to start hurting.
Well, because you have people losing their houses because they can't pay because they're out of work. Well, that means the vacancies go up on office space because there's not there, and then it leads to defaults, and then dropping the price down, trying to keep people.
Yeah, absolutely. Scott, how do folks get in touch with you?
Really easy. Go to WeCloseNotes.com.
WeCloseNotes.com.
WeCloseNotes.com, where they can always text notes to the phone number 72,000.
So 72,000, text notes to 72,000. I appreciate the time, young man. Thank you so much for being on.
Anytime.
And I look forward to buying some apartments at 50% off here in the next 3 to 5 years.
We'll definitely do that, man.
We will definitely do that. This is Jason Bible with Scott Carson, Right Path Real Estate, WeCloseNotes.com. We'll see you guys after the break.
Mike's off.
All right, Chief. I love it, man. Anytime, man. Anytime you're in town, we're bring on the show.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Are you looking for an investor-friendly
All right.
general contractor for your investment property?
Do what?
Then call Fast
You
Track
bet.
Modeling at 832-742-9992.
You bet.
All right, Jay, you got a little less than
That's
a
the
minute.
guy.
At fasttrackremodeling.com.
That's the guy that when
Fast Track Remodeling specializes in turnkey remodeling of single-family investment
when
properties.
multifamily, that's what we were talking about here.
Yep.
When multifamily is an utter disaster, he'll be helping us buy those non-performing notes.
Standardized process.
Over the last 6 years, Fast Track has completed over 700 projects.
I get these guys, they're
which
like,
has helped us to
well, he
create
sells real
our
estate
3
education
keys to
too. I mean,
success.
and you
Use
have him
a
on the radio
detailed
show?
scope
I'm
of
like,
work
with his
so that
notes.
everything gets
Right.
He's a
done.
good dude.
Train and
Who cares,
maintain
man?
Quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
There's
No more
That's
managing
the
it
scarcity,
yourself, no
right?
more doing the
I
work
know, it's
yourself.
like
Fast Track Remodeling.
There's only one of me.
has
Who
it
should
all.
I buy from?
Yeah.
No, there's actually
Yeah.
100,000 of you.
Yeah.
9992. Again, that's 832-742-9992, or reach us on the web at fasttrack.
all right, guys, big announcement. We'll get everybody all pumped up.
Oh, you know, I sent you an email. I don't know if you have time to.
I can pull it up during at the
At
next
the next
break.
one, which might be a way to do.
All right, stand by,
we'll see.
guys.
Yep.
Stand by, hot mics.
Welcome back. Welcome back. Jason Bible, Right Path Real Estate. Interview and Investor Friday. I got Robert Orfino of JB Fund Services. How are you doing, sir?
I'm doing awesome. Thanks for having me.
Excellent. Excellent. So we've got a big announcement today. I don't know. You know, I can't decide. Do we want to talk about it in this segment or do we want to do it in the next segment? I'm kind of a next segment kind of guy.
Sure.
I like to tease him a little bit. It's
That's
not any
fine.
fun. It's not any fun if you don't tease him a little
We can
bit.
lay out a little road work to get there.
That's right. Yeah, we'll give you guys a little runway here, a little runway. So, why don't you talk a little about what JB Fund Service is? And you're out of LA and you invest in multiple markets. So let's talk a little about that.
So JB Fund Services helps folks create crowd funds. So it's investors and entrepreneurs who need to raise capital. And, you know, prior to the Jobs Act in 2012, there were very limited ways to do that. And most of the ways you had to go and find some angel investors and venture capitalists and do that whole thing. And, you know, you lose 60% of the company before you even have any market share penetration. So for us, we love crowdfunding. And that's what we do. And I guess we kind of position ourselves as the architect of crowd funds in that the investor can come to us and say, hey, this is what we want to do. And we sit down and say, hey, is it feasible? Is it realistic? Are you going to run this like a business, or are you just looking for cheap money? And folks that come to us who want to start a crowd fund who are looking for cheap money, we say you're better off just taking some bankers out to dinner.
Yeah.
And keep networking in that world, and you'll find cheaper money.
Yeah, banks and private lenders. I mean, you
Absolutely.
can definitely get a truck
Sure.
ton of money to that.
You can do it that way because you know everything we do, and what you teach, and what we believe in is run it like a business.
Yep.
And if you're not running your fund like a business, then you know you'll soon be out of business.
That's
so you
right.
need to make sure that you understand that there is a back end that has to be fulfilled on a fund. And so we explain all that to the folks, and once they get it, and you know some of the funds that we're running are we think are. They're very clever the way they're set up.
Oh, yeah. Yeah.
You know, using leverage and be able to get some larger returns than most of the people on the deal. So we set up. We worked with a few folks, real estate investors, and we laid out distressed asset real estate there. We did that in Houston and New Jersey, and it took us about 18 months to figure it out because we are in a new industry, and while we're figuring out, the federal government still hasn't told us how they're going to enforce crowdfunding.
Yeah, so if you guys are familiar with the Jobs Act, which passed in 2012. Was it 12?
Yep.
And then they implemented it in stages.
Yes.
So I get these updates, I'm sure you were getting them
Yep.
too, where they'll say, okay, now you guys, now we've implemented this, and the SEC says, now you can do this.
Right.
And then, of course, you hand it to your attorney, and the attorney goes, well, I mean, this is what the law says, but you and I both know what the law says, and then what happens through case law
Sure.
is a whole different animal, right? So everyone's trying to kind of fumble through this thing together, and it takes a lot of time to implement.
That's at the federal level.
Yeah.
So
Oh,
then
that's
when we
right,
want to
yeah.
come to the state level, we have to go and make sure that the states are up to speed and they're understanding everything that's going on. And in some cases, in some of the places we were looking, they weren't.
Yeah.
So it's like, no, you can't do that. It's like, but there's a federal law here that says they can do it.
Yeah.
So we just have to, and the
And
lawyers
the state
get
guys,
involved.
wait a second.
Right,
Yeah.
because it's going to change their operations, and so there's a learning curve with anything new.
Yeah.
And it's not good or not bad, it just is.
Yeah.
And so once we got through the learning curve and once we felt good, like, hey, we can operate in these states, we started making the move. And then once we were ready to rock and roll everything out, we bring in our expert. We have a sort of advisement panel, and they start poking holes in everything.
Yeah.
And so then we go back to the drawing board and kind of fix it all up. And so finally we rolled it out. Less than a year ago, we rolled out distressed asset real estate for New Jersey and Houston. The projects that we've been able to run through have been successful. Now, we've run into the same flipping problems that everyone run into, but at least we had a plan for them. And that was the big thing, to protect our investors' money all the way through. And so that's what JB Fund Services does. That's the first two funds that we have coming out are the DARE programs.
So DARE was pretty funny. Well, I guess it wasn't funny, but we were up doing the weekend retreat in Dallas.
Right.
And I was chatting with Colby, and I said, hey, doesn't DARE have a project down in Dickinson? And he says, yeah, they do. And I'm sitting there watching the TV. I was in the hotel room, and there's a John Deere tractor, like a big tractor, and water's up to the wheels in the tractor, and there's a guy in a jet ski, and it's in the middle of the intersection. This guy's on this jet ski doing donuts. And so I took a picture of it, and I sent it to him. I said, how close is your house to this intersection? He said, you see that Taco Bell right there? It's right behind that. And he goes, it's got to be flooded up to the first floor. So how much water did that project end up
A
taking?
little over 5 feet.
Okay. God, that's a lot of water.
And even worse than that, we had the CNN reporter in the rowboat go right by our house. I was like, well, we're going to have
there it is, guys.
We'll figure it out, right?
Yeah.
But thank God we had all those protocols in place because we kind of knew immediately what to do.
Yeah.
Let's jump on this, get our claim filed. Let's figure it out. Let's talk to the hard money lender. Let's make sure they understand what's going on with us, and we're still in the deal. We're going to work through it all the way to the end. And, we just got our insurance check. So we got our flood insurance because we definitely took flood insurance on every project we do. Imagine if we didn't, right?
Yeah, geez.
So we just got our check. That's we're going to go work that out with the hard money lender this morning. And we're back on track. So we're feeling really good about that. But if we didn't have all those protocols, all those what ifs, and a really good panel of advisors to throw all those hardballs and curveballs at us, we'd be in trouble.
Yeah.
But we were able to get through it. So we're very, very happy about the function of the fund and how everything that, when it does go wrong, everything we planned to work did work.
Well, and what's interesting is you're talking about running it like a business in that we know right now that there are a litany of real estate investors that are not going to make it out of Harvey without bankruptcy. It just they didn't have flood insurance, or they couldn't self-insure, or they didn't have all those other processes in place, and they're going to get hammered. I mean, we had houses that flooded. Now, one of them we don't carry flood insurance on all of them because we figured out how much the premium is, how much do we self-insure, all that other stuff. So, but most investors aren't that sophisticated. They take the weekend class, get the books, tape, CDs, sign up for the quote coaching. I'm using air quotes for those of you who are listening to the radio, and then something like this happens, and they're not ready for it, and it takes them down. And we were chatting one day. You and I were talking about the fund side. We see so many people that sign up with an attorney, $40,000, $50,000, $60,000, whatever it is. They have, quote, a fund, but they don't understand the investor relations and the compliance side. That's a whole nother animal.
Absolutely. There's a whole back office to everything we do here, and the key to anything you ever do with money is disclosure. Just disclose and be completely open. If you can't, even if it's just because you have so much going on that you're not even thinking about that, you're in trouble. Yeah. It's not as though you're hiding anything, but you're going to put yourself in trouble. So we are completely open. We actually have a new company that we're working with to basically open up our back end even more. And so we're really, really happy to be rolling that out in the first quarter of 2018. You'll be able to just log on and just see the projects and see the money in and out.
That's cool.
So everyone it's completely open. That's and that's a big thing. And most of our investors are passive. They don't want to think about that. But there's always that Saturday night where someone's thinking about their money and they jump on the laptop and let's see where it's at. And, hopefully everything that if they do that, everything's good. For us, it will be because it's fully disclosed. I know some other scenarios, there were a lot of investors who did private deals in flooded areas and are going to have problems here.
So we've got a number of our private lenders contacting us about a week after the storm. They were like, guys, would y'all mind sending us the deck page for your insurance? We were closing some deals. They said, and they've never asked before. And they said, well, can you guys make sure like all this stuff is insured? And I said, well, and then of course I got to educate our investor. I'm like, we don't buy flood insurance on everything. Here's why. And they go, oh, okay. And then of course I'll send another email back and say, let me guess, y'all had some people you lent to that couldn't self-insure or didn't have flood insurance, and and then of course I always offer to our private lenders, say, hey, look, if you got to take any back, just get us involved first.
Yeah.
We've bought non-performing notes. You'll love this. We bought non-performing notes from private lenders who are lending to gurus here in town. That's my I can't. When I got that phone call, I couldn't stop laughing. I'm like, wait a minute, this guy teaches real estate education. He's defaulting on these hard money loans, and so we ended up taking them back. Some we bought, some went to auction, some that we bought, and then rehabbing property and put it back on the market and all that stuff. So anyways, it's we always leave it out there to our private lenders. Hey, you ever getting a deal that's going sideways? Bring us in early, and we can help you try and get out of the deal, without losing too much money.
And my big thing is in the last 30 days, once everyone is safe and sound and infrastructure's up and running, it's how about all those investors that overinflated the ARV pre-flood?
Yes.
And now they're taking a 20-25% hit on something that was already overestimated by 10%.
Yep.
They're done too. They just don't know it yet.
Well, the other number I'm looking at, what a lot of investors missed in this storm, is it goes back, we talk about margin, right? You got to have enough margin in these things. The only risk management tool you have as an investor is paying less for the property.
That's right.
That's it. So
2 minutes.
We see a lot of investors with, this area of town's appreciating 10% a year. I'll pay 10% more for it because there's going to be this appreciation.
That's speculation. That's not
exactly
investing.
what it is. That's not investing. So, and then the storm hits, and then bam, they get slapped with it. But here's the crazy thing. Even if your house didn't flood, but houses in your neighborhood did, there's going to be an impact on value.
Yeah.
So, my house didn't flood, my flip didn't flood, but there's an impact. I'll give you a perfect example of this. We're flipping one 2 miles from here, 3 miles from here. Didn't flood. The vast majority of the houses in the neighborhood didn't flood. Before Harvey, that house would have sold in 24 hours, like that.
Right.
It's been on the market for 25 days, and we just got a contract on it. And that was in a hot neighborhood. Harvey blows in, it completely changed that market.
In a lot of ways, just people who are now going to be unemployed for 30 to 60 days because their job isn't there. You can't get a mortgage without a couple months' paychecks. And it's just, there's a malaise.
Yeah.
There's not a happy feeling. People aren't excited about going out and finding a new house to live in. They just want to sort of sink back onto their couch and just feel secure for 6 to 9 months.
Yeah.
And that buying season just kind of wipes it all out.
Yep.
So that's the other thing we were worried about. We were being told that, hey, if it didn't flood, you're going to make more money. It's like, no, I don't think that's the case.
No.
I don't think that's the case.
People are driving around and if you're on the market looking for a house, you're also thinking, we also know that about 90% of these houses didn't have flood insurance.
Yeah.
So now these people are trying to figure out, well, how do I get my house fixed and how do I move into another house? And I'll tell you some of the anecdotal stories we're getting, particularly from mothers who had to put life jackets on their kids and get rescued by boat. And while they're driving away, they look back at their house and they'll say, I'm never going to live here again, and trying to figure that whole thing out. So the market's going to be a little weird for the next 12 months or so. All right, when we get back from the break, we're going to talk more with Robert Orfino of JB Fund Services, and we've got a big announcement. It's Jason Bible, Right Path Real Estate.
Mic's off, guys.
Thanks. All right, let's see if we got any questions in here.
As a real estate investor, you rely on your property inspector.
You ever had your Facebook Live shut off?
No, not mine.
This is the second or third time it's happened. They just shut it down.
For you.
For me.
Yeah. So there's someone in Tennessee watching you.
Yeah, it must be.
There's an office out there. They outsource a lot of their.
Do they?
Yeah, a lot of their stuff. Yeah.
I had to ask Casey because it happens every couple of months. They just shut me down for like 4 days. It drives me nuts.
for investors because
But it works fine, like in our commercial page. Just my personal page won't work.
Well, as just, social media, you should be doing everything from that commercial page anyway because you can always boost your ads.
Yeah. So I share these over and boost from there.
Boost from there.
Yeah.
Inspections 832-684-5560.
I actually need to go through and do all that stuff. Our guys, we're running these different campaigns right now. It's pretty cool. Like the radio show, every time we post on Facebook, we get about 2,000 views every 24 hours, and then we boost them. We're getting up to almost 20,000, and dirt cheap. It's very, very specific targeting. So it's been a lot of fun to see all that grow.
This is exactly why we started Next Gen Appraisal.
And it looked like you were doing a little Facebook Live in there, huh?
I was, yeah, absolutely, letting people know I was going to be here, and then we had a good week. We had a very good couple days here in Houston. We're very happy with the progress we made this week. And, met with doctors last night.
Yeah.
Explained to them what was going on, so that was fun.
I like it. I like it. I'll tell you, hanging out with Lauren yesterday was...
Why settle for mediocre results? There's a better place to
Yeah.
I was like, we'll see how this goes. And then when we sat down and chatted, I'm like, holy cow.
Right.
This dude, he's been in the middle of some of the biggest things. So
Big
Tom,
names, right? Yeah.
So Tom and I were chatting last night, and he said, it's amazing. Every time we get, I don't want to say stuck in a business, but we're looking for, like, where's the next level? Guys like him literally just walk in the door.
Yeah, you had a 3-hour mastermind.
Yeah, that's exactly what it was.
Perfect.
Yeah.
It's exactly what you needed. It's the power of the mastermind.
Yeah.
It's amazing.
He goes, yeah, we used to close 1,000 houses a month. I'm sorry. And I was like, I'm sorry, what?
Yeah. At a weekend event.
Yeah. I'm sorry, you did what? Yeah, and then he goes, let me show you how we did it. And he just starts drawing on the board. And then, of course, talking about the education piece. He's like, well, let me show you what $1 billion in sales looks like. And I was like, what?
Yeah.
And
then I saw him when he slid that knife in.
Oh, yeah.
I was like, oh, no, here comes the X.
Yeah. Well, then he went to our event last night.
Oh, I heard. Yeah. Did he take notes and give you?
Oh, we went to dinner afterwards. And he's like, and he said, look, I'm not trying to be rude. I'm just going to give you my advice. Y'all take it for what it's worth.
Right.
I'm like, no, bring it.
Yeah.
Bring it on.
Right.
And I just start writing. And I'm like, we're not doing that anymore. We're not doing that. Not doing that. And it's like what I was telling Tom. I said, it's kind of like when you get an investor in here and they start they're in our group, right? And they start learning what we do. And you don't know those things until you do that much volume. You realize where you can scale and where you can't,
Sure.
what works and what doesn't. And when you get that big, you know, hey, do this. What about these 7 things? Yeah, you can make money doing those 7 things, but I'm telling you, it's these 4, right?
Our company
Yeah, billion-dollar company.
On building
Yeah,
those
just
teams who
amazing.
operate with structure,
Incredible.
process, and recognition for going the extra mile. For
And do you know
you.
he speaks fluent
This way, we
Korean?
have the
Yeah,
opportunity
yeah.
to
We were
make
at the
your
Korean
best
barbecue the
home
night
purchase
before.
ever.
30 seconds.
Give
That was
us a
great.
call today
That's
to
cool.
find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.
Yeah, I think he's gonna be back.
Or
He'll be
call
back here in Houston a couple
713
We got him coming to LA in January.
Oh, that's cool.
We're gonna do a whole week
Again,
of his products and things. So
that's cool.
jennifer.legacymutual.com.
And we're gonna make him do that
Can't
smart
wait to
banking
consult with you
segment for us.
soon. NMLS 514497.
Yeah, I want to do so. We're going to make some changes at the weekend retreat, and I do want to do a smart banking section. All right.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/rightpathrealestate.
Hot mics.
All right, welcome back. Jason Bible, Right Path Real Estate. I'm here with Robert Orfino of JB Fund Services. Welcome back to the show. Do we want to give him the big announcement?
Well, let's talk about what the fund we have existing right
Yeah.
now is DARE, distressed asset real estate, and it's for the Houston market, and we've defined it to be very geographical and what projects we're looking for. And the investor that we're looking for in that is an accredited investor. For folks who don't know, an accredited investor is an individual who makes $200,000 a year, or a household that makes $300,000 a year, and or has $1 million in assets, not including their primary residence. And so they're accredited investors, and typically the SEC looks at them and says these people should know about investing. There shouldn't be too many problems, and that's the people we work with in that fund. They know real estate. Frankly, most of them are flippers who haven't had a good experience but still want to stay in real estate.
Yep.
So that's been our target all along. We've been very successful about meeting those people and bringing them into the fund. But what that means is to the other 95% of your audience, they cannot participate in the fund.
That's right.
And so I think you and I were almost in daily contact for the first 30 days after Harvey, talking about things and how we're doing things. And I was following you on Facebook, and I was adding my knowledge that I learned from Sandy in New Jersey, and we talked about the market and where it's going to go. And we just started brainstorming. So we think we have something that can help the community and profit our investors and open that up to a lot more of your audience than just the accredited investor side. So with that all in mind, we crafted a fund that is it's ready to go. We've worked with our attorneys. Our attorneys were moving very fast, and she's great. And I'll give her a plug, Jillian Sidoti. She's awesome. And we went through it, and we said, okay, this is how we're going to do it. This is how we're going to bring money into the community, and this is how we're going to invest in the community. So we are launching the American Recovery Fund, and it'll be based here in Houston, which will mean that I will be based in Houston.
That's right.
So you get me along with the fund.
That's right. Moving from that beautiful weather in L.A.
Absolutely. I'm not sure how much time I'll spend in August here.
Yeah.
But seriously, we're bringing the manpower and we're bringing the team here to really focus on it because, it's been almost 60 days or so, but the real work is still months and maybe years ahead. There are still a tremendous amount of work to do to rebuild some communities. And so we're very excited to bring that, and we'll be working with you and Tom. And so this is
the American Recovery Fund. I love it.
Yep.
So the idea is that in times like this, if an investor doesn't step in a big way, these housing markets in certain submarkets will collapse.
Yes.
Absolutely collapse. You can't have 80% of the neighborhood vacant with that turn into drug houses and all that illicit activity. They turn into dangerous areas of town. So the American Recovery Fund is essentially going to go in and buy sections of these areas up, and then to protect the current owners, we're not going to release all this inventory at once.
Right.
You've got to be selective so you don't crush the home values with all this inventory. So the idea is to buy these things up and slowly release, protect the neighborhood from a distressed asset standpoint, and then slowly release the inventory via rental properties and retail sales.
Right. And we have to be prepared because there is an exemption now for mortgages, but that's going to go out. And if people don't have the ability to pay the mortgages at the end of that 6 or 12 months, then there's going to be foreclosures, right?
Yeah, absolutely.
And, the affluent areas are going to survive. There's not going to be a problem.
Memorial's going to be just fine.
Yeah, Memorial, right. It's the working class neighborhoods.
Yeah, it's the Bear Creek Creek. It's the stuff up in Cypress. Some areas of Kingwood. A couple of guys from LA were in town. A friend of mine was in LA on Wednesday or Tuesday, and we drove around Houston. He got to see that in person. He was like, "Holy cow!" I mean, he goes, "You talk about the numbers, but seeing it in person, I mean, it's entire neighborhoods, right?"
Right.
So, and it's not something you'll see from the air. You got to get into the streets. And being able to do this locally, which is why the fund is going to be stationed here, because of all the action here. But it won't just be Houston; it's the American Recovery Fund. So Florida is also on the table,
right? And my big thing has been over the last few weeks, people have been asking me about this, and there's been hints of it going out there. The difference between Florida and Puerto Rico and Houston was a flood, and those other places were floods and wind.
Yeah, the wind was incredible,
which is structural. Right, so now there's massive amounts of structural damage where we're not necessarily seeing that. We might have to do some reframing here with hurricane straps and some other, pins and things like that. But for the most part, it's flood damage, and we know how to deal with that. We know within 14 days we can mitigate all the problems with it and get back to square one. In Puerto Rico and in Florida, we have things. So there will be a run. We'll be able to look at Puerto Rico and Florida in probably about 16, maybe 24 months. Is realistically. By that time, this market should be fairly recovered. There'll be pockets that'll still be, won't be well. There'll be a ninth ward like what happened in Katrina that are just stuck there. But for us, we'll be able to move through it.
And the difference between this event and Katrina, and what a lot of people don't know because they just know, all Louisiana or all New Orleans flooded. No, that's not the case. The biggest damage was in the Ninth Ward, which is not a great area of town.
Right. Before the flood?
Before the flood, it wasn't great. Flood may have improved some things, right? Because then they can go through and rebuild some of this stuff. In Houston, it's a whole different animal. It hit a different socioeconomics group, but the vast majority of the damage was at the median home price and above.
Right.
You know, it was the 250K to $1 million house. That's a great area to invest in, and it's also the area of town that is that you can't allow those neighborhoods to depreciate because these people need places to live. Right. That's where all the jobs are at too. Those people, it's the median. It's really, even when you get into $1 million house, it's not. People think somebody who buys $1 million house, they're not living a paycheck to paycheck. They've got a whole garage full of Lamborghinis and all that other stuff. And it's like, that's not the case. They just make a little bit more money, right? It's the same middle class problems that just like anybody else has. So those markets are prime for something like the American Recovery Fund, because you're investing in some really great, the middle market, really great market for Houston.
100%, and that's why we're really focusing this fund to be community based. In that we're in the community, we're raising money in the community, we're going to improve the community. It's not like someone from Goldman or Deutsche Bank ran down here with $500 million and said, "Hey, let's buy all these houses." This is a strategy, and it's going to go up for the next 2 to 3 years. We didn't run down here the week after the flood, running around with paychecks trying to buy trying to buy houses. We weren't doing that. We're going to build this out. It's going to take a little time, and we will help the community, and we'll be within the community. So that's the strength of the fund.
Yeah, it's so funny. You know, all these hedge funds. I'm getting phone calls from hedge funds and banks and all that. And so, we're going to come down there. We're going to buy a whole bunch of inventory, and come on board and help us with it because we got so much money. We're just going to saturate that market. And I said, you boys don't seem to understand. We've whipped hedge funds and REITs so bad down here. I'd love to see come on down here and set up shop without us. Let me know how it works out for you. You're going to get whipped.
It's that whole carpetbagger mentality.
Yeah.
You have to be part of the community. And, and I feel very proud that I've been working in this community for 18 months and working with investors and educating and helping and raising money. And, again, talking to you and Tom over the last 60 days says, okay, let's do this.
Yeah.
Let's do it in a big way.
Yeah. I'll tell you one thing. We thought that the recovery would be much quicker. In other words, homes would start selling faster. And I'll tell you, the telltale sign that the recovery has started is when you go to Home Depot and the sheetrock is gone. Because
there was so much.
There's so much, yeah. But I'm seeing, we're right here on I-10. I can see 18-wheelers bringing. It's interesting. I see 18-wheelers bringing sheetrock in, and I see trucks full of demo debris going to the Hardy landfill. They're literally passing each other on I-10. But the fascinating thing is, the sheetrock inventory still is pretty good because most folks haven't gotten their checks yet.
That's right.
So once they start getting their checks, that's where we're going to see inventory start hitting the market. People are holding on to these dreams that the county is going to buy them out. They're holding on to this dream that FEMA is going to write them a big check even though they don't have insurance, and that's not going to be the case. And it's going to be the next 24 months, maybe 36 months. I think the remaining 12 months kind of trail out. But, if you want to build income and wealth, now's the time to do it.
Right.
Like, there is no better opportunity. And I like to say that these cycles come in 10 years, but I think something like this is kind of it's a once in a lifetime, because it's not like the whole nation is depressed, right? So usually in a crash, credit becomes the issue. But there's more money than that's why these guys are flying here, right? There's more money and they know what to do with. However, it's a unique regional event, and you can go in and get a lot of assets right now from people that don't want them. That's the other thing you've got to realize is people don't want these assets right now. Some people are going to be underwater. We're going to be buying non-performing notes. Mama doesn't want to live there anymore because she had to put her babies in a life vest. And who else is going to buy those houses? Their neighbors aren't going to buy them. Their neighbors are in the same situation they are. It's going to be investors that go in and save these neighborhoods.
Absolutely.
1 minute.
Absolutely. So just a little side note, one of our advisors who sits on our advisory board went to a conference in Santa Barbara. It's a pretty big name guys there, and they said, hey, this is what we think is going to happen over the next 5 years. They think pensions are going to be a crisis in this country over the next 5 to 7 years. And they said if there's only one place we'd ever think that there's going to be massive growth, it's Houston.
Yep.
So that was pre-flood.
Yeah, exactly.
Right? So now the opportunity is even greater. And so we think we can be a part of the community, we can help the community, and we can help investors do it the smart way rather than just sort of just chasing everything around. Because we see a lot of people chasing stuff. And it doesn't make sense to me.
It's the next hot thing, right? Yeah. So how do they get in touch with you, Robert?
So we're going to go to our website is jbfundservices.com. You can go there. There's a contact us page. Fill out the information. We'll get you some more information on the American Recovery Fund. You can give us a call at 800-901-0809. That's 800-901-0809.
Thank you so much for being on the show. Robert Orfino, JB Fund Services. It's Jason Bible, Right Path Real Estate.
Mike's off.
Excellent. Thanks for being on. Do what? Yeah, it's a short one. It's like 2 minutes long.
So I think that was good.
That was great. This is when we were chatting with Lauren to build this whole the Right Path financial. It's the holistic thing, right? Put some of your IRA money in the fund, buy some houses, do some, get hooked up. That's right. Yeah.
The way we're going to do this with you and your team, I think.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes.
I keep telling you, you gotta move down, but you want to be in spring, don't you?
I want to be close to the airport. I got to be able to
Yeah.
Yeah.
And you're gonna have to be close to Bush. She could live in the Woodlands. Yeah.
281-569-4353.
All right, man. Thank you very, very much.
That's 281-569-4353.
You bet.
Or online.
Isn't that sweet? We've got a matching postcard. I don't know where it's at, but we're gonna start. So we're starting to put these out, and then we're gonna start doing postcards.
I'm Jennifer Hernandez,
so good deal.
Senior
You
loan
bet. What is
officer at
that?
Legacy Mutual Mortgage, and we have mastered the Thursday close. We close on time, accurately, and with tons of communication. You'll have a dedicated team.
So are we doing Astros cheers? I didn't hear any cheers coming in out of my office.
Give me a call today.
No, Astros.
579-1111, and let's talk about how we can help you on your next transaction. NMLS 514497.
I do not have my jersey on today because we're meeting with a lot of the folks that are sponsoring or recommending Right Path Real Estate, endorsing us. So, plus the jersey's starting to get a little stench on it, a little stank, because I'm not going to wash it until we win the World Series. So it's getting a little rough. Maybe I need to put it out in the sun or something.
Or you can reach us online at foundationcheck.com.
Rehab loans, conventional loans, FHA, and no-income documentation loans can seem scary unless you have the right mortgage company to guide you through the process.
Hey, Jason, do you have anything to do with JB Funding? What a coincidence, JB Funding Services. I do not, aside from this fund we just started. The American Recovery Fund, I am a... They don't call them partners. I think they refer to them as sponsors. So I am a sponsor of that fund, which is pretty cool.
As a real estate investor, you rely on your property inspector.
I should do a little Facebook marketing education for us tribe members that are challenged. I can. Maybe we'll do a little how to do Facebook marketing. That came up in base camp last night. So we may do that. Boy, base camp last night was hilarious. There were like 5 people here in Houston. There were only like 5 or 6 people online. All the Houston people were like this because they were up late watching the game the night before. It was pretty funny.
Or online at principalinspections.com.
What's going on, Michael?
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Are small returns getting in the way?
All right, Jay, 30 seconds.
Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Look, folks, here's the deal. Opportunities like this come around maybe once in 10 years. You need to be at our weekend retreat, period. It's like $300. Look, I'll make you a deal, folks. If by the first day of the weekend retreat, it's not what you expected, you're not getting any value out of it, we'll refund your money right there. It's risk-free. In fact, we don't even make any money on these weekend retreats. We're building a partnership network. That's what we're doing. We're building a partnership network. And I met Robert through our partnership network. I met Colby through that group. I met Scott through that group. These are the people you want to be working with because they're building wealth and income through real estate. And they're our group. You want to be a part of that? First step, weekend retreat. Couple $100. If it doesn't work for you, you're not getting any value that first day of the weekend retreat, we'll refund you right there. It's Friday, Saturday, and Sunday. We're doing it, I want to say 17th, 18th, and 19th of November. Let's go to rightpathrealestate.com, sign up there. But I'll tell you what, if you don't do it, you're going to regret it. This is an incredible time to be in real estate. Absolutely incredible. If you hustle the next 12, 24, 36 months, you can retire. I'm telling you, you work hard enough, you can retire. But it's right now. It's not wait 6 months from now. It's not wait 2 years from now. It'll be here and gone like that. So get into our partnership network. Come to our weekend retreat. Learn how to invest in real estate like a professional. If you're stuck, we can get you unstuck. Our group is very successful, buying a lot of houses. Our group next year will buy 1,000 houses. That's what we're doing. Highly recommend you come out to the weekend retreat. It's a great event. We show you, we draw back the curtains, show you how we built Houston house buyers. So come on out. Go to rightpathrealestate.com. That's rightpathrealestate.com. I'll be on the show Monday. I'll have a special announcement for you guys on Monday. We'll see you at the next weekend retreat. It's Jason Bible, Right Path Real Estate.
All right, Mr. Bible. Have a good weekend.
All right. Thank you, ma'am.
You're welcome. Bye.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom